What is up, everyone? I hope you can all hear me. It is Monday, September 22nd, and what we're going to do today is break down what we got going on for the week ahead, along with a breakdown from what we saw last week. So, naturally, we have the Forex Factory news here on the screen for the coming week. We have orange and red folders to go through. We also have a blank screen here from what it would seem, but let's give it a moment here. Maybe it can load. But this is FedWatch futures here on the screen. The blank screen kind of coming back to life, maybe. FedWatch futures to give us the rate odds for the October meeting. What if we reload this? Fantastic. So let's see, until this loads, we can put it here on the side just a bit. But what we had last week, right? Last week was a pretty busy week in the overall market. Everyone was waiting for the Fed rate decision, and then we were looking forward to seeing OPEX, right? OPEX Friday, which came around, and markets made moves into new all-time highs last week. So let's go through some of the FOMC stuff or the Fed decision stuff that we had last week. That was the main point of interest for many traders and investors alike, to see what we could get going on with that rate cut. So the Fed cut by 25 basis points down to 4 to 4.25%. The prior Fed's funds rate was 425 to 450 basis points. And this is the first cut of 2025, right? We had the first cut of 2025 and the first one since December 2024. Now, in terms of a vote breakdown, we had an 11-1 vote in favor of the cut. The one dissenter was Stephen Myron. So he's the new Fed governor that was brought on, and he had the support of Trump, actually. He argued for a larger cut, a 50 basis point cut, citing signs of very significant and deeper economic slowing, which, in essence, right, everyone's been trying to put, well, not everyone, but a lot of people have been trying to push for further cuts, more cuts. Right now, if this can load, I don't know why it's not loading like this, but if this can load, I'll show you what the expectations for the October Fed cut is, and right now it's about 90% for another cut. So why did the Fed cut rates, right? We had a labor market cooling. Jobs gains have slowed noticeably over the last few months. Unemployment is also inching a bit higher. Still historically low, but trending up. Wage growth is softening, hinting at cooler demand. And we had sticky but slowing inflation. Inflation is a huge component, and it is one of the main topics that we're going to be looking at this week. The core PCE, the price index, is the Fed's favorite inflation gauge, which is coming out this Friday pre-market. But they talked about inflation, which remained slightly above target, but headline and core readings have cooled modestly. The Fed noted that tariff-related inflation from China, from the recent China-EU trade frictions could pose some upside risk, and we're still hovering around or just around 2.5% at the core PCE, which is the Fed's favorite inflation gauge. We'll see that reading that comes out this Friday. So the Fed now expects two more 25 basis point cuts before the year end, down from the projected one earlier. The 2025 GDP forecast was revised slightly lower, and unemployment projections ticked higher. Inflation forecasts largely remain unchanged, signaling concerns of upside risk. So some of the key language from the statement from Powell: growth has moderated, right? Inflation remains elevated. The committee will continue to monitor incoming information, and the Fed acknowledged greater downside risk to employment for the first time in this cycle. No direct signal or guaranteed next cut. Data-dependent approach still remains intact, and Fed Chair Powell emphasized that the Fed is not a preset course for cut. Said that they want to balance risks between under and over tightening, and acknowledge that the policy is restrictive, but may need to ease further if job weakness remains, reaffirming that the Fed is watching global growth risk, consumer slowdown, and tariffs. So what we got going on here, the next meeting is October 29th. Right now we have a 92% chance, you can see here on this is from FedWatch Futures, you can easily go and find it, but 92% chance of another 25 basis point cut to get us down to 375 to 400, about 8% chance that things remain constant. Naturally, we do have about a month's time until that comes out. So there are other data points that are expected. And then the last meeting of the year is December 10th. And December 10th says that we have an nearly 81% chance there's going to be another cut, which would take us to the 2 expected cuts by the end of the year. We'll see how these things shape up. Naturally, the U.S. is behind the curve in terms of rate cuts compared to other central banks across the world. And this week, in terms of data, we have Fed's Myron, the new Fed speaker, or the new Fed governor that talks today at about noon Eastern time. And then out of the U.S., we have flash manufacturing PMI on Tuesday, flash services PMI on Tuesday. We also have out of the U.S. right after the market open. Then we have Fed Chair Powell speaking around noon, just after noon on Tuesday. And then on Thursday, we have final GDP numbers quarter over quarter and unemployment claims pre-market. So this is going to be something to watch out for. And then naturally, the core PCE, the Fed's favorite inflation gauge that comes out on Friday. So how can we get prepared for this week? Now, last week we had a pretty strong downside move off of the Fed rate announcement earlier on in the session. By the end of the session, we had rallied. By the end of the week, we were trading at all-time highs, and OPEX Friday caught some offering earlier on in the session, but by the end of the day, we were trading at all-time highs yet again. So we had a little slip up here on the Sunday pre-market, but what does that tell us? That tells us that we're developing a balance into these highs on NASDAQ, right? NASDAQ, let's look at NASDAQ first and the S&P. So realistically, a lot of this pullback into these areas to the downside have presented more buy-side strength to come in. The buyers are eager. They're looking at this, and trying to just pinpoint the moment to strike and get on the buy side. So where does this leave us this week? To start things off, yes, we can say that there is some pretty poor structure to the downside, suggesting that there is very low and weak volume on several of these sessions as markets have moved into all-time highs, and there is a lot of developing volume into these highs, meaning these developing distributions. One of the key factors for the upside momentum is developing balances that stay and then prices move outside of them to the upside. So right now the developing balance is showing us the bottom around 24,650, the top is around 24,820. There's a midpoint here at 24,730 on NASDAQ. So theoretically, there are 2 areas for the buyers to show up on today's session and at the beginning of the week to hold out against the weak structure, meaning the buy side is wanting to attack 730 on NASDAQ and 650 on NASDAQ so that we can break above the balance top at 820 and continue pressing into all-time highs. The movement above 820, should we see that today to begin things on a jolly note to start the week on a Monday, we should see some of that upside momentum take us even towards that 25,000. We got to get the NASDAQ 25,000 hats out. The poor structure is below 24,650, right? You can see the weekly profile is very thin here, very crappy. That suggests that there's a very easy move to the downside should we start breaking 24,650 on the NASDAQ, where we go clean up some of that poor structure and buyers are expected to come out to support the overall momentum at 24,560. So I am looking bullish. The only reason for me to be bearish this week is if we start getting significant closes below 24,560, which will change the structure before further buyers try to step in. You can see from a price action perspective, we're back creating higher lows after a move under 24,810, 815 here on this NASDAQ. To potentially make a move back to the balances to the upside swing. So I'm only like super bullish if we get a massive move above like 24, 830, 840 and then start printing higher lows to see that buy side momentum come into some of the absorption that was left behind on the overnight. Now the S&P has shown a few more signs of weakness to a degree. We can see that there's a developing balance between 6690, this general bottom over here, and then the top is at 67, like 10, 14 area. We've since moved under that balance top on the overnight. You have some weak structure. Naturally, you can see this is Wednesday from the Fed. Very weak structure down to 66.10 or so before they caught the bid. we have some major balances that have been developing into these highs. So the way that I see it is if 66.90 can hold a bid to start things off on the week, that's great. We'd want to see if 67.10.15 actually breaks to the upside. Otherwise, we're going to have to look for dips to buy into 66.80 and potentially down into that 66.60 where structure changes slightly. But overall, I do want to explore some of that dip buying momentum as big tech is starting to gather itself for its potential expansion to the upside. There have been some lagging names in big tech, although some have been expanding. They're still not cohesively moving higher together, which suggests that breadth has some slight weakness. So I do want to remain a little more bullish. Maybe if we can clean some of the structure to the downside, we can find some of that momentum higher in the market this week. There's not too many crazy events to look out for that create disturbances in movement and in price. So that's something to consider as we go forward. So keep that in mind. Keep in mind that we have Fed speakers Myron and Powell this week, along with the GDP data and the PCE data towards the end of the week. That could cause a little more turbulence. But right now, as things stand, there is continuous momentum to the upside as long as some of this structure lower gets cleaned significantly and we can continue buying. That means that dip buyers are most expectedly to come out this week, so keep an eye out for that. With that being said, I hope everyone has a fantastic start to the week. Check out community.tradeproacademy.com for our open Discord, and I'll see you guys in there, and let's open up our live room.